The 2024 U.S. presidential election sent shockwaves across the globe. Financial markets reacted strongly to Trump's unexpected victory. Investors were left reeling and uncertain. The future seemed unpredictable. Many worried about what a Trump presidency would mean for their investments. Trump's victory brought back memories of his first term. During that time, markets saw both highs and lows. Some investors hoped for a repeat of the economic boom experienced then. However, others feared a return to the volatility that also characterized Trump's first term. The global landscape in 2024 is very different from 2016. The COVID-19 pandemic, the war in Ukraine, and rising inflation have created new economic challenges. These global factors will undoubtedly influence how markets react to Trump's policies. The coming months will reveal whether Trump can navigate these challenges effectively. The uncertainty surrounding Trump's economic policies only added to the anxiety. Investors were left to speculate about the potential impact on various asset classes. Some sought refuge in traditional safe havens like gold, others turned to alternative investments like Bitcoin. The divergence in strategies highlighted the uncertainty and the range of opinions about the future. Immediately after the election, markets became highly volatile. Investors scrambled to adjust their portfolios. Some sold off assets, fearing losses under a Trump presidency. Others saw the uncertainty as an opportunity. They bought assets at lower prices, hoping for future gains. This volatility highlighted the deep divisions in market sentiment. Some investors clearly believed that Trump's policies would harm the economy. They sought to reduce their exposure to risk. Others were more optimistic. They saw Trump's victory as a chance for deregulation and economic growth. The uncertainty extended beyond traditional markets. Cryptocurrency markets, known for their volatility, also experienced significant swings. Bitcoin, the most well-known cryptocurrency, saw its price fluctuate wildly in the days following the election. This highlighted the sensitivity of even this relatively new asset class to political events. The differing reactions to Trump's victory underscore a key point. Investing involves navigating uncertainty. There is never complete consensus about the future. Successful investors must carefully assess their own risk tolerance and make informed decisions based on the best available information. Gold has long been considered a safe haven asset. Investors flock to gold during times of economic or political turmoil. They see it as a store of value that holds up well when other assets decline. The uncertainty surrounding Trump's election led some investors to increase their gold holdings. They hope to protect their wealth from potential economic shocks. Bitcoin, on the other hand, is a relatively new asset. It is a decentralized digital currency. This means it is not controlled by any government or financial institution. Some investors see this decentralization as a major advantage. They believe that Bitcoin offers protection from government interference and inflation. The interest in Bitcoin as a safe haven reflects a growing distrust of traditional financial systems. Some investors believe that central banks and governments are mismanaging the economy. They see Bitcoin as a way to opt out of this system and take control of their own financial future. Whether gold or Bitcoin will ultimately prove to be the better safe haven remains to be seen. Gold has a long track record of preserving wealth during uncertain times. However, Bitcoin's decentralized nature and limited supply make it an intriguing alternative for investors seeking to hedge against inflation and economic instability. Trump's victory has created a complex and uncertain landscape for investors. Predicting the long-term impact of his policies is difficult. However, understanding the key factors at play can help investors make informed decisions. First, investors should pay close attention to Trump's economic policies as they are implemented. Tax cuts, infrastructure spending, and trade deals could all impact the market. Understanding how these policies might affect inflation, interest rates, and economic growth will be crucial. Second, regulatory changes under the Trump administration could significantly impact certain sectors, including technology and finance. Investors should monitor these changes closely and adjust their portfolios accordingly. Third, staying informed about global economic trends is more important than ever. Events outside the United States, such as the ongoing war in Ukraine or a slowdown in China, could have ripple effects on the global economy. Finally, investors should remember that diversification is key to managing risk. A well-diversified portfolio that includes a mix of stocks, bonds, and alternative assets like gold or Bitcoin can help mitigate losses and capitalize on opportunities in any market environment. The coming months and years will be a period of adjustment as the world grapples with the implications of Trump's presidency. By staying informed, being adaptable, and sticking to sound investment principles, investors can navigate this uncertainty and position themselves for long-term success.